Good morning. I'm with Mike Allen of Strikepoint Gold. Strikepoint has had a little bit of a move up here in the last few weeks, and I think it's a very interesting setup in the stock and at the corporate level for the company. And so we're going to dig into Strikepoint with Mike. Mike, how are you doing today?
I'm doing very well this morning, Robert. Thank you very much for taking the time.
Yeah, it's my pleasure. I think sometimes we have to look at stocks that are very cheap with tight share structures, low share prices, and maybe the market has overlooked them in 2025. A lot of gold miners have had big moves here in 2025, so sometimes we have to dig a little deeper to find opportunities. I think Strikepoint might just be an opportunity. So let's start this with how I first met you. I think it was in early 2018. I took a trip out to Las Vegas with a bunch of other commentators, a few bank analysts, and also the management team for a company called Northern Empire. And we drove up the highway there, 95. We went a couple hours north to what was called the Sterling mine, the Sterling project. And that was the flagship at Northern Empire at the time. And for me, it was a very eye-opening site visit. And it really gave me confidence that this company was going somewhere. And then lo and behold, like 6 months later, you guys got acquired during a bear market summer of 2018 for the gold mining sector, especially the junior mining sector. But I think it was like a $120 million buyout, if I'm not mistaken, there by Core Mining. And that's how I know you. That was a very nice big win, and it also gave me confidence that the state, the Walker Lane, and so you're doing it again with Strikepoint. Tell us about Strikepoint, and in what ways is it similar to Northern Empire?
Well, thank you for that. I mean, it was a lot of years, 5 years ago now, or whatever that number is, that we met. I mean, Northern Empire was another Walker Lane story, and it was the Sterling asset, so it was right here, just outside of Las Vegas. Walker Lane, similar to what we're doing now, and there's a lot of things that are similar about Strikepoint and Northern Empire. We're essentially acquiring forgotten assets in the Walker Lane. The Sterling we acquired from Imperial Metals, and we were able to do that. Strikepoint is and when we did that acquisition, we restructured the company and the way it went. Strikepoint is also focused in the Walker Lane. When we acquired the Hercules Gold Project, which I found forgotten in another company, we restructured the stock, rolled it back 10-for-1. There's about 41.6 million shares outstanding right now, and we're driving forward on that. But the general rule for what I do in the Walker Lane is big land package. Hercules is about 100 square kilometers. Cuprite is about 40 square kilometers. The Sterling was about 150 square kilometers. Relatively unknown projects, and advance them and bring them forward to the market.
So there's been some activity in the state this year in 2025. So the Pan mine has been acquired now in a transaction. I think the total price tag is like $110 million, US dollars. Yeah. And the Augusta Gold takeout, as well, almost a $200 million, valuation there for Augusta. So what's going on right now, and what's the opportunity that you see in the Walker Lane?
Well, I mean, the Walker Lane relative to the rest of Nevada is relatively underexplored and relatively uncompetitive. You get up here into the Carlin Trend, Sketchel Trends, it's very difficult to find a project that hasn't been drilled down to 3,000 feet. And you can find stuff in the Walker Lane where mineralization is at surface, and you can actually make discoveries and go. In terms of Pan, you compare that to what we have at Hercules. So Pan is never been a particularly big deposit or mine. It's 30 to 40,000 ounces a year, all in sustaining cost 1,600 to 1,700 bucks an ounce. And what we're seeing in terms of a fundamental shift in the market is that in the last 18 months, for the sake of the argument, the gold price has doubled. It's outstripped inflation, and these low grade things just start to move money. Before the move in the gold price, Penn's shipped home, call it 16 million bucks a year, and now it's about 65 million dollars a year that it's shipping home. So there's a fundamental change, and these low grade things that Nevada is known for are doing a fundamental shift. There was an article that came out of Barrick this weekend about they're talking about their 4 Mile project. It's up here. I mean, it's probably right under the G in Strikepoint Gold, and they're saying it's one of the biggest discoveries of the last 100 years. Okay, that's interesting, but we also are looking at the Anglogold Ashanti project, and it's about a 16 million ounce discovery. These are monstrous world-class discoveries being made in a mature jurisdiction in 2025-ish. So lots of interesting things going on. You also mentioned the Augusta transaction. This is for the Bullfrog down here, which is just north of the Sterling. Anglogold has consolidated this whole district here. And again, the Bullfrog, it's a little bit bigger than what we expect the Hercules to be based on what we have right now, but the grade is right along where we expect it to be, about halfway in our expected range. And Anglogold paid, I think it was $197 million Canadian for this project. It also had reward, which is permitted for construction. So you can see, we're a $4 or $5 million market cap company right now, and similar assets are going for $200 million. That's the leverage in the stock and the opportunity for anglovers right now.
With Augusta Gold, I gotta ask you, Mike. I mean, obviously with the Anglogold project there,
Yep.
they have an incredible gold project that's going to be long life. I mean, it's going to be 30, 40, 50 years mine life there for sure. Why would they acquire Augusta if their core project area has an average grade above a gram? Why would they acquire an asset that's 1.2 million ounces at 0.53 grams?
There's two things about it. Is that I think that what they're doing is they've bought 2 permitted properties that are permitted to go. They bought North Bullfrog, and this was 370 million bucks, and they bought Reward. And I think what they're going to do there is essentially get their starter kit going, and they're going to start producing for these on these lower grade things, and have a practice run and make sure that they've got their crews, their equipment, their social license, everybody's trained up. And then when they start picking up the 1 gram per ton or 2 gram per ton material that is the Arthur, they're doing it efficiently. That's what I think is going on there. But you also even take that step back to the previous slide, and if Pan is shipping home $65 million a year at 0.34, if they start producing at Augusta, for the sake of the argument, 0.75, that's going to ship home, pick a number here, and we're sort of making it up because we haven't got a PEA or a study.
It's going to be over 100 million a year, maybe.
Exactly. There you go. And even for somebody like Anglogold, that's a considerable amount of dough. And so I think that there's an opportunity. They're seeing the writing on the wall. They're pushing everybody out. This is our part of the world. And these small things that they're picking off, and North Bullfrog was actually significant, are actually in a rising gold price, are making serious money, and so they're getting ready to get going, establish a base in Nevada.
Got it. Yeah, they own that whole district now. I mean, they've basically bought everything. There's only maybe a few assets left to be acquired down there.
Yeah.
Yeah, so let's talk about the Hercules project and what Strikepoint is up to here in 2025.
Yeah, I actually just a comparable of the Western U.S. stuff that we can move on. I mean, Hercules is a exploration target, so an early stage resource for the company. It's a grade range of between 0.48 and 0.63 grams per ton, so very comparable. And it's about 819 to 1.02 million ounces. So good size, good grade. This is just a chart of Western U.S. projects. You can see how the Hercules project grade range sits in there, and we're seeing transactions. This is Reward. This is Bullfrog. Pan is right here, 0.38, or pardon me, 0.4. And it just got sold. I haven't update the slide, but you're seeing things that are happening in the Western U.S. and all of these projects are viable, interesting things. And we're sitting here with Hercules in the right grade range, the right jurisdiction, and the right sort of oxide gold deposit that are going to see serious looks in the next few years here for the company. So there's a market that's emerging. You're seeing a lot of gold companies move, and I think that this is the market to unlock value at Hercules.
Okay.
So in terms of where we're looking at for 2025, we just got a new drill permit, so we're up to 3 now, and that's for the southern part of the project. So we have a total of 4 drill permits on the Hercules Gold Project. One, what I'll call a big permit, it's called a plan of operations for delineation drilling on the exploration target in the northern part of the project, and 3 exploration notices for smaller permits in the southern part of the project. So the way that we can sort of balance our news flow for 2025 and beyond is be drilling by the numbers, sort of an infill program in the northern part of the project, but also be working in the southern part of the project and showing the upside, showing beyond what we have in the exploration target. So it's a balance of sizzle and steak, or backstop of value and upside. And so it's a good position for the company to be in. We've got lots of targets to drill, and we've got all the permits in place that we need for right now. In terms of what we've done recently with the project, we announced a program this spring, and this is 2 of our biggest hits were on the southern end of the Hercules target. This slide is a good example. We measured it out, and this is about where this intercept lies. This 117 meters of 0.47 grams per ton gold and a titch of silver is probably right underneath my feet, about probably 100 meters down. The important thing is this is the southernmost drill hole, right about where I'm standing, but you can see there's an old working just behind me here, and some fool crawled in there and got a 1 ounce sample from the underground face at the back of it. And this structure, it's a ring structure, and it carries off into this hill back here. So it goes into this slide undercover, and then you can find it again back in this hill. So there's a lot of open ground to work with. So the exploration target, importantly, isn't closed off. So we're looking between, again, 0.8 and 1.02 million ounces at decent Nevada grades, but it's also open for expansion. So we can move further to the south on here, and maybe take this over the top, maybe it goes to 2 million, maybe it goes to 3, and that's in the northern part of the project where we have that plan of operations. So we've also importantly gotten the project to where it's predictable. We had 100% success rate in our drilling in 2025. We hit what we were shooting at, and so we're going back to that sort of almost painting by numbers to fill up the resource and start moving things on that.
Yeah, let me just pause you for that. So the 117 meters of 0.47 grams per ton gold, was that drilled this year, or is that a hole that was drilled in the past?
That was this year. That's a 2025 hole.
Okay. That's
So
interesting because that's a really good drill intercept. I'm surprised that there wasn't more, attention to that. I mean, that shows scale, and you're at a mineable grade there, especially when you're in oxides close to surface.
yeah, I mean, you can see the mineralization. I'm standing on the vein right now, so it's like you say, it's right at surface, and it continues to depth. Um, it was a different market. I think that if we would have put that hole out today, I think that we would have gotten a lot more love on it. But it was spring of this year, and for whatever reason, it wasn't a drill market. It was just one of those things where the market was looking at production numbers, and that was about it at the time. I think
Was that in April?
yeah, about that time.
Yeah, so that was when the market was in turmoil. So you actually put out the result at the only time of the year in 2025 where you wouldn't have gotten attention.
Well, I mean, some days you're lucky, and some days
Some days you're not. Yeah, yeah. If you recall, there was that one period of turmoil, and it was in April for about 2 or 3 weeks, and yeah, and then it was up and away since then.
yeah. And unfortunately, I mean, the way that the rules are, if you've got that information and it's material to the market, and drill results are, you got to get it out there. And
Yeah.
so we couldn't hold it. We just put it out. You can't wait, try and time the market. So you just get it out there and hope for the best. And unfortunately, we picked a day that it was raining, for lack of a better term.
Mm-hmm. Yeah.
So yeah, I mean that's the exact point. I mean, Hercules is capable of putting out good numbers, near surface oxide gold, mineable widths, and we're not getting a lot of love in the market. It's a $4 or $5 million market cap company these days, but I think that the asset and the potential of it, put it side by side with North Bullfrog. There's a lot of drilling to be done, or pardon me, Bullfrog, but it's the same sort of Walker Lane near surface oxide gold, and you're in an area that these sorts of grades, as demonstrated by Pan in a mine, make a lot of money. So I'm excited to get out there and get drilling. I want to get out onto the exploration targets further to the south. I want to get out onto the plan of operations in the north, and just start moving this project forward. It's a great project, great location, great jurisdiction, and you can see the potential for this thing to really be something in the Walker Lane.
Yeah. Can you flip to the plan map of the Hercules project? Yeah.
Yeah.
So what my question is, and just knowing the market. So in the market environment we were in 2023 and even through most of 2024, I don't think investors would pay attention to 100 meters of 0.4, 0.5 grams per ton gold, even in this location, even near surface. The retail audience just doesn't get it. 0.4 grams per ton gold, and even, like, for example, that Pan mine asset. I mean, if you look at the history of that asset going back 10 or so years, it never really got much love from investors until it got fully permitted and started spitting out cash, right? So, as like an exploration target, it was largely, kind of irrelevant for a long time. But as the gold price continued to appreciate, they got it permitted, they got it into operation, and they are able to show financials and cash flow. Then, well, that obviously changes it, because you're showing the market that you're spitting out cash. But now we're in a different environment here in September 2025. So we have to kind of reframe everything and actually point 4.5 grams per ton gold near surface in oxides in the best gold mining, jurisdiction in the world is pretty attractive, especially if you have visibility to 1 million ounces in resource. So let's talk about that. How do we grow this asset and prove that it is 1 million ounces, Mike?
Well, we're pretty much there with in terms of the 1 million ounce. The exploration target is 290 some odd holes in this neck of the woods, the northern part of the project, and the estimated tons grade, whatever you want, is between 819 and 1.02 million. So somewhere in there we're going to be. Now, what we established with this drilling before is there's a lot more back here. There's more to be discovered. So I have no problem in my mind saying, yeah, we're going to punch through 1 million ounces, 1.2, 1.5, somewhere around there on the northern part of the project. And that's obviously up here. And then we start thinking about what can happen in the southern part of the project. We've got 3 targets that we've got permitted for drilling, which is Sirens, Pony Meadows, and the Comets. And they're all attractive. They all look like they've got the scale, particularly Pony Meadows, for getting something, another 1 million plus ounces into the back part of the southern part of the property. Sirens, we'll just start with talking at the north. It's about 2 kilometers south of the main Hercules showing, up and over the hill. And one of the great things is, is there gold there? Yes, there's gold there. There's 6 holes that have been put into this program, or into this target area, and they ended in mineralization. They're looking pretty decent thicknesses and width, and it ended in 0.85. So 38 meters of 0.64, ending in 0.85, 25 meters of 0.68, ending in 0.91. There was an operator that was here, and they were looking for Comstock style mineralization, so narrow but very high grade stuff. There is the potential for that there, but that's not what they got. They got 25 meters of 0.6, 30 meters or 38 meters of 0.64, and there's visible gold that you can find down there. You can pan it out of the vein, and so we don't know how big this is. They ended it in mineralization. Is there another 5 feet of 0.85, or is there another 50 meters of 0.85? We don't know. And so that's a really intriguing target for us to go down and take a look at. And we'll get down there hopefully later this fall or early into the new year. The one that
what's that the purple stuff at Sirens, Mike? Sorry, what's the purple stuff there in
this?
Yeah,
that's just iron stained quartz, just in the pan concentrate. But it's look at the gold stuff there.
So that's just in the RC chips. You're seeing that.
We've never drilled this. This is literally a geologist walking up to a vein, gathering up 5-6 pounds of gravel sitting at the bottom of the vein, and then going and panning it.
Wow! So there's still gold to be found from panning.
Yeah, it's as the old timers said, there's gold in them there hills. And there you go.
Yeah. All right. Sorry, I just had to ask a dumb question.
No, that's it's purple in this image, but if you look at it, it's just, if you were to take a step back, it's just iron staining onto those quartz crystals.
Okay.
Pony Meadows, again, visible gold at surface. There's this piece right here. There's a few others in here if you get yourself to it. What attracts me to Pony Meadows is we've sort of concentrated in this area. There's an old working, there's an old glory hole where this is panned from. But there's a very significant structure. It's a ring structure, and it's about 2.6 kilometers long that you can trace it at surface. And so that's never been drilled by anybody as far as we can tell. And so there's a real opportunity. Like 2.6 kilometers is a mile and a half. That's big. And if we can start to put up some numbers, whether it's an open pit heap leach target or more of a Comstock, a high grade thing, it'll be interesting to see, because there's a lot of ground to work with, and we're excited to get out there and drill it. The third is this Comets, where we're permitted to drill. This block right here, if you can see the cursor moving around, that's owned by Newmont, and there's what's called the Comets the Como mining district, and the Comets are off the end. And there's an old past producer, there's an old open pit heap leach thing here, and we've never drilled it. We've got it permitted to drill, but you're sitting there and you think about an exploration target that's sitting between two producers, and the trend is out this way. So there's a pretty good probability that we're going to put some numbers up on the board with our drilling here. And like I say, it's never been touched by us, but you take a look at the big picture, and we're just getting started at Hercules. We inherited a database up here that says we're on our way to 1 million ounces plus. We've got visible gold at surface here. We've got visible gold at surface here, and we've got an exploration target between two historical producers down here. So I think that the overall picture that we're looking at here is this is going to go well beyond 1 million ounces, and then you're into that, you're at that sort of scale where people are going to start looking at you in Nevada, the #1 jurisdiction in the world. Grade is important, but the gold price moving so much is making grade, as long as you're sort of in a decent grade, that half gram range, you're seeing companies get acquired, and you're seeing what these sorts of mines can produce in terms of cash flow. So I think there's a lot of opportunity in a $4 or $5 million market cap for investors to come in, get behind us, get behind the team, and allow us to drive this forward.
Along the genre of dumb questions, I know a lot of retail investors don't get low grade bulk tonnage targets. They don't get it in copper, they don't get any gold. So let's actually try to delve into a little bit and explain how the economics, for example, at a mine like Pan might work, right? So Pan is clearly now a cash cow. Totally. And if we just analyzed it on their drill results, like if we pulled up like an assay table of like 50 drill holes at Pan, I doubt that most retail investors would be terribly impressed. And if it was a publicly traded stock, they probably wouldn't buy the stock. But at $3,500 an ounce gold, let's just round up, and just for the sake of this back of the napkin conversation, 0.5 grams per ton average grade. So let's say that we're mining 0.5 gram per ton ore body, right?
Yep.
So how do the economics work of a heap leach, mining operation that's open pit? You're not really going down deep in the earth. You're mining the first 100 or so meters. Tell us about how the economics of that would work, Mike.
Well, let's make the math simple, because let's assume a gold price of $3,100 an ounce. Mm-hmm. And just to make that simple, that makes a gram of gold worth $100. Mm-hmm. And to use your number for Pan, half a gram per ton gold is $50 American a ton. Mm-hmm. And so that's what you're dealing with now. Mining costs in the state of Nevada, I mean, you're using the biggest equipment that CAT or Komatsu or whoever the hell has. You're looking at 220, 300-ton trucks. And so the efficiency is there for these, for a lot of material, a lot of $50 bills to be thrown in the back of a 200-ton truck. I guess a simple math, a truckload is $10,000 worth of gold. Mm. And they produce, these things go at maybe 15,000 tons a day. So there's a lot of material that's being put onto the heap leach pad a year or a day. So you've got a lot of money to work with. The other side of it is, when you think about oxide versus underground or milling ores, the amount of energy to extract the gold in an oxide deposit versus a milling scenario is a lot less. So in a lot of cases with an open pit project, you can do what's called run of mine leaching. And what that run of mine is 24-inch minus. So it comes out of the mine blasted, and for the sake of the argument, it's about the size of a microwave oven as a piece of rock, and that goes right onto the leach pad. And so the energy that you've got to put into it is the explosives, picking it up, putting it into the truck, and then hauling it out and putting it on the leach pad. So it's a rule of thumb is about $1 a ton to pick it up, $1 a ton to drive it. So you're at $2 a ton, and then you got it on the leach pad, and then you've got to process it. And there's chemicals and people and everything else running around out there. But you can see where it gets to, okay, we're spending $20-30 a ton to put a ton of rock onto the leach pad, manage it and all those things, but we're making $50 a ton.
Mm-hmm.
I'm being a bit simple there, but because I'm not factoring in recovery.
Recoveries and all that. Yeah, but basically there is a margin if the ore body is close to surface. If it's oxides and if it has pretty good recoveries above 70%, then you're making money at 0.4 or 0.5 gram per ton gold all day long.
That's right. And when you're doing it at $20, for the sake of the argument, $20-25 a ton of profit, and you're putting 15,000 tons a day onto the leach pad, you start doing that math out, and you get to a funny number. You get to the $65 million number, and it's like, okay, that's what this does. Mm-hmm. And so you look at something like Hercules. I mean, they scaled Pan 15,000 tons a day based on what they knew of it. It's not particularly big. So to make the economics work, they choked it back and they said, okay, we're not going to run this at 100,000 tons a day because the ore body doesn't support that, because it's only a small ore body. You look at something like Hercules, and we're pushing through that 1 million ounce number. Then you start thinking about running 100,000 tons a day at 0.5. Start doing that math, $25 a ton times 100,000 tons a day times the recovered, blah, blah, blah. And you get to not just a funny number like Pan, $65 million. You get to a really funny number because the grade is better and the size is bigger. So that's the opportunity for it. And the other part of it is, this is Nevada. It's not the same as something in the Arctic. I mean, I worked at Hope Bay back in the day, and we were at the edge of the Arctic Ocean. We were up there in February, and everything is expensive. I tell this story a lot because it's true. We sat there and looked at a can of Coke, myself and my boss, and you're sitting in the kitchen, and what does this can of Coke cost? And it's crazy. And you buy it in Yellowknife for $1.
It's a gram of gold.
It totally is. And you figure out how much, throw it in a plane, pay a guy to get it out there. You break some because they're frozen, and then you realize that can of Coke, and this is back in the year 2000, cost $7 or $8.
Jesus.
Versus Nevada, you go into Costco, pay 23 cents for the can of Coke, throw it in the back of the truck, and away you go, and you're there. It's a completely different game. So the logistics and the infrastructure of Nevada make these things so different than the high grade things that you see up in the north, the Hope Bays, the Back Rivers, the Gooses, those sorts of things. They're a completely different animal. And you can make good money at those high grade things in the Arctic, but you've got a lot of logistics and a lot of things to figure out.
Those aren't projects for a junior. Those are projects for a
dear
senior.
God, no. No,
Yeah.
no. That's big company all the way.
Yeah. Okay. So we got it. Our
Yeah.
goal is to define 1 million ounces at zero point 0.4 grams or better at Hercules. So let's get the plan of action here. What's the plan of action for Strikepoint? How do we get this company back on investors' radar here in 2025?
Well, and that's part of it is getting out there and explaining what we just did. The economics of this thing have the look like it could be so strong. We're running this thing at pick a number 100,000 tons a day at those sorts of grades. We've got to do the studies, we've got to do the work, but I think that we've got to get, and those studies and work equal the news flow, and part of it is you're seeing the shift. You're seeing the shift that's happening, and it's being led by the seniors. Anglogold taking out Augusta for $200 million. Well, why are they doing that? To your question earlier, because they need a starter kit for their operation down further to the south. Why did Pan go for $115 million American? Well, it throws out $65 million a year. It doesn't mean much to Equinox, who's producing 1 million ounces a year, but for a junior company, that's a lot of dough. And so you're seeing retail investment. Actually, another recent transaction that further cements it is Centerra did two things in the Western U.S. in sort of the past 6 weeks. One, they made a go decision on the Goldfield deposit, which is a 0.66 grams per ton deposit. It's just north of our Cuprite Gold Project, and they made a go decision. We're going to put this mine into production. It's not particularly big, it's not particularly high grade, but if you look at it at $3,500 gold, it pukes out money. So they're going for it, and again, it's just another data point that big companies are seeing what the trajectory is and going and starting to deploy capital. The other thing that Centerra did, which was quite interesting, is they took a 9.9 interest in Liberty Gold, which is the black pine, dominantly driven on the black pine up in Idaho, and that I believe is a 0.32 gram per ton deposit.
Yeah, that's pretty low grade. That's
Yeah.
If if you want to talk about bulk tonnage, that's bulk tonnage deposit.
100%. And Liberty has struggled for years, that they've been beating the drum that this thing will make money because of the scale, its bulk tonnage, and now they've just got an endorsement from a mid-tier to a senior, however you want to classify Centerra at, that Centerra just put in $28 million into that deal, and they're saying, yep, we believe it. And well, what is the writing on the wall saying is that these prices are or better are here to stay, and that these low grade things are going to be highly leveraged to the gold price. So for turning back to your question, what do we got to do? We've got to get out there. We've got the permits. Let's get using them. Let's get out there. Let's get drilling and get going. So in terms of where I'd like to get the company going is I want to get a program off into the south and see if we can crack this thing open. We've had Big Co looking at us, and they've said, you really should give these targets in the south a go before you'll get us interested. Okay, fine. Not a complete fool. Well, let's get the permits and let's give it a go. Hercules in the north, the main mineralization up here. That's, as I say, painting by numbers, establish that resource, and then start talking about the upside further to the south. And this project has got a massive upside to it. And I think that for a $4 million market cap, we're as all junior CEOs say, we're widely undervalued.
Okay, so we're going to drill in the south. Before I ask you about that, are these the claims? Which regulatory agency do you get your permits from?
We work with the BLM.
The BLM. Do you have any private patented claims here?
There's a smattering. There's a couple of patents up around here, around the Lucky Rusty, showing there's a couple down here. I believe that the breakdown is it's 1,323 unpatented claims, making up the majority, and I think that there's 6 patented, 2 up here and 4 down there.
Okay, got it. So you just got permits from the BLM for which target areas?
So it's the most recent one is Pony Meadows, but we've got 4 individual permits. So there's one big one that sort of covers an area up here. This is called the plan of operations for the northern part of the project. And then there's called a notice level for the Sirens showing, the Pony Meadows showing, and the Comets showing.
Okay. So are we going to drill at Pony Meadows or Comets?
For me, I'd like to touch all 3 in the south. I mean, we know that there's gold here, we know that there's gold there, and you're sitting on between 2 producers down here. So it does become a budget question, but my preference would be to hit all 3.
Okay. So it's a
If we
budget.
Yeah.
It's a budget question. So it's going to be an RC program.
Yep.
How many meters would you like to see drilled, and what would the budget for that be?
Off the top of my head, I would say 4,500 meters would be what we would be looking at. It's about $30 a meter for drilling down there, maybe a bit more because we're a bit further to the south. So
Did you say 30 or 130?
For the whole, it's about $30 a meter. The RC guys fly. It's and then throw assays on top of that, double it up, $60 a meter.
Wow. Hold on. So that's crazy because I read a news release from a company last week, same state. They were applauding their RC drilling costs are 200 a meter, and they were saying that's good. So I'm a little surprised to hear you say that.
They must have had some ferocious road building to do that. I
was surprised because previously I've heard companies tell me it's 100 to 130 a meter is what their all-in costs are for the RC drilling. So when I saw a news release where they were saying 200 a meter and they're under budget on their RC program, I was like, wow, that's strange. We're seeing more inflation in drilling in Nevada.
I mean, when we drilled on the northern part of the project, I think that we were sub 80 everything.
Mm-hmm.
And so I guess $30 for a meter for the whole, $30 for the assaying, maybe that's about right. And then whatever the geo and the water and the road building, throw it in. So I mean, the one that you quoted for $200 a meter, wow.
Yeah, it was. Yeah, when I read that, I was like, that's weird. I'll just leave it at that. So let's just say 4,500 meter program. So let's be conservative, say $500,000 American. Yeah, I mean, is that the plan?
That'd be a great start for the south. Touch it and see where we get to. See if we can break it open, and then it'd be another program in the north, starting to infill and expand on it. So, I mean, I'd love to run off $2-3 million, $4 million program out there. I don't think that we've got the market cap to support it, but we're also moving up in our valuation. So maybe we can pull off a program. I mean, one of the challenges of the juniors is the access to capital, which is changing, and being able to do something meaningful that you can sustain news flow into the market. And I saw a thing about marketing, and there's the flywheel approach, which is just keeping things drip feeding, moving things forward, and you get a good momentum going once that flywheel gets moving. Versus the bomb, you just drop a bunch of marketing in, and the same thing is happening in terms of news flow for a company. If you're only a one news release company, you drop everything into the market, And if you happen to, like what happened to us, we pick a day that it was raining, that's it. You shot your shot, and that's the end of it. If you've got a sustained drill program, you can sit there and flywheel. And I'd like to get the company to a stage where we're doing, you know, a serious drill program, long-lived, and multiple news releases, and get that momentum and be able to keep pushing on the market. And I think that a lot of what Strikepoint needs to do right now is actually just get out and get in front of people and just do the math that we did, and just say, okay, well, this is what Pan throws out in a year. This is the transaction that of Augusta. This is the transaction where Centerra is making a construction decision in the state. This is Strikepoint. It's $4 million market cap company, and it's comparable to all these different things, comparable or better, and just, you know, put the proof, you know, put it in front of people, get marketing, get talking to people, and just show them what this is. And I think that we'll see a re-rate coming from that. Back that up with some drilling and get going from there.
Yeah, I think it's a good plan. So let's just final question: share structure and company finances. So obviously you did a rollback. Share
Yep.
structure is a lot tighter. Tell us about the share structure. Who's got the shares? You know, who are your largest shareholders? What are the company's cash and treasury, and what are your financing needs?
Yeah, so I mean, right now we've got about $1 million of cash and securities. This is at the 1st of September. We're about the same. It's a little bit more. The securities that we hold have gone up in value in the market. The major shareholders, the two biggest, are Pathfinder and Eric Sprott, and they're neck and neck at about 9.9 each. Then it becomes down to management, and the next two largest shareholders are Sean Kuhn. Sean's the executive chair, and myself, and we've got an equal position, but collectively management owns about 4% of the company, and Sean and I are the lion's share of that.
All right, thanks, Mike. I appreciate your time.
All right, take care.
Cheers.